Hello everyone. In this video I will teach you two specific things. I will teach you two ways to make money with almost zero risk. With almost zero risk. If you follow everything properly, then the risk will be almost zero. And believe me, this is not a clickbait or anything. This is really true. And I'll prove it to you. Okay. So let's begin. First thing, when we start a business, we need a big capital. Let's suppose I am planning to start a business on rice field, because my old business is this. So I am planning with around 11 or 12 lakhs budget. So the construction cost will be 4 lakhs around to construct a godown, and 8 lakhs will be my investment. And I am easily expecting 10% return in 3 to 4 months or maybe 6 months. It shouldn't take more than that. So overall I will generate 80,000 rupees profit on 8 lakhs investment plus 4 lakh investment on the construction. So overall on 12 lakhs investment I will be generating 80,000 rupees. So that is around 7.5% return, I think. Okay, so that is 80,000, 90,000. So overall 7.5% return on 3 to 4 months of investment. So that is good enough for me, because I want a stable business and I want to make money with zero risk. And the third thing is I am generating more return than my bank. And this is my passive income, because I will buy it, store it, sell it 3 months later. Really, I'm planning this thing, to be honest. So this is good enough return for me, because this is my passive income and this is a good return with very much safety, right? Without any kind of headache. So I'm planning to start this. Why I'm telling you this? Because from the stock market as well, without constructing anything, without doing anything, we can generate this kind of return. And I'll prove it to you today. So there are two ways to make money from stock market with zero risk. But in both of those ways, let me tell you, we need an investment ranging from around 8 lakhs to 12 lakhs. Yes, if you don't have that capital, you can, when you have that capital, you can do it. Otherwise, just know it for learning purposes. First thing is arbitrage. What is arbitrage? Let me just show you what arbitrage is. Most of the time what happens, let's suppose this is ICICI Bank, right? In ICICI Bank, as you can see, this is the spot price. It is running at 677.9 rupees. That is around 678 rupees maybe. And its future is running at higher price, 679.75 rupees. So there is a gap, right? 1 rupees, 1.2 rupees gap. Sometimes these gaps are bigger. When the month is starting, the gap is around 1%. In some stocks, there will be 1.5%, 2% gap. So that is huge. So let's add Reliance. I think Reliance is, let's add Reliance. I'll be doing it in front of you, okay? So that you can understand it. Now, okay, Reliance is actually at deficit. Okay, first let me find you some arbitrage opportunity. So what we will do is, we will search arbitrage in money control. Now as you can see, these are the basis points, right? I'll just arrange the basis point. Let's suppose this is Intellect Design, and this is giving us the biggest arbitrage opportunity, 1.38%. So we will add Intellect. As I said, this is completely zero risk. Intellect Cash, Intellect Future. Now as you can see, this is giving us 10 rupees, 11 rupees in return. And what is the lot size? The lot size is 750 rupees. Oh, 750. Okay, that is good. So that means, just imagine one thing. You are seeing 10 rupees gap here right now. On the expiry day, both will be the same. On the monthly expiry day, Intellect will trade with 737 rupees and Intellect March Future will also trade with 737 rupees. I won't go to the extreme. I won't explain why this happens, because that will take so much time. But let me just assure you, this will happen. They will trade, both of them will trade at the same premium. So what happens when we buy the Intellect Cash and we sell the future? When they both comes at the same price, at whatever price, it doesn't really matter which price, the gap of 10 rupees or 11 rupees, that will be my profit. That is sure shot 7,500 rupees profit. And to do that, we will create a arbitrage portfolio. Let's see what happens. Let's add intellect. We will buy 750 quantities. It will take us around 5,53,000 rupees. We will add future and we will sell it. We will sell it 750. Add. So overall margin that is needed, it is around 7.29 lakhs, that is 7.3 lakhs rupees. Right? Now we can execute it and we can be assured that 7.5 thousand rupees or almost 1% we will be getting with our eyes closed in 1 month. That is almost, this is completely zero risk in my opinion, but sometimes if this anything, as you can see, the in Reliance case, this happens sometime, in Reliance case, the future is trading lower than the cash. That sometimes happen, but it won't stay. Ultimately, they will balance each other out. And as you know, we always are able to sell the future, but we cannot sell the cash. So obviously, we need higher future prices to execute this kind of strategy. But as you can see, this thing happens as well. Sometimes cash trades higher and future trades lower. But in that case as well, we have bought the cash, right? So overall, we are in profit. We are in always profit. So that's the beauty of this. Now we will go to the brokerage calculator and we will see what happens when we buy intellect and sell intellect with some little profit. How much brokerage they charge? Around, we have bought it around 737 rupees, 738 rupees, right? So buy price will be 738 and sell price will be maybe 10 rupees higher. So 748 and the quantity will be 750. So overall our net profit will be 6,255 rupees. So let's suppose it is 6,200 rupees profit and our investment was 7.29 lakhs. So 7.3 lakhs. That makes the return of around 0.9%. 0.8%. To be honest, 0.8%. Safe return with almost, totally zero risk in my opinion. So 0.8 into 12 times, because you will be executing this every month, 12 times. So that means 9.6% overall aggregated return per year with complete safety, zero risk. So that is the thing. Obviously some risk factor will always be there, some uncertainties, some bounces and different kind of things, but this can be manageable. These things are easily manageable. So that is one way, arbitrage. This is the exact thing that big guys do to create passive income, and some private brokers, they offer leverages on these kind of things. And because of those leverages, you can easily generate more ROI on your investment. Okay, now first thing is gone. Now we will move on to the second thing. That is, if you don't have that kind of capital, bigger capital to do that, I will show you second best option. Just give me a minute. Let me search something for you. So what I have searched, you have seen it, right? The strategy that we are going to use is called wheel strategy. Let me show you. First, what we have done is we have searched the top 10 most reliable stock. So as you can see, Reliance, Infosys, HDFC Bank, ICICI Bank, these stocks are really good and really stable. They move slowly, they move really stable manner. So we will choose any of them. Let's choose Reliance because the lot size is much smaller, only 250. So we have opened Reliance, and all of you have your own different setups, and I have my setup as well. So I have opened Reliance, and I am using the monthly zone and the weekly zone. Whenever the price comes to the monthly zone here and weekly zone, because both the zones are coinciding, so that creates a ultimate support, temporary support for me. So what I am doing here is, whenever the price is creating a reversal formation, I will buy a stock, the whole lot of Reliance here. I will buy the whole lot of Reliance here. So let's suppose my buying price is 22 and 50. 22 and 50. Now let me create a new basket. So as you know, the Reliance lot size is 250. So I will be buying the whole lot here. It will take me around 6 lakhs, right? Now what I'll do is, I will sell a call here. As you can see, the monthly zone, above the monthly zone, there is a strike price, right? 2460 or 2500. Let's see which one is available. We have 2460 available. So what we'll do is, we will sell it. This price is low now, but yeah, this price is very low, 0.5 rupees, because this has expired. So let me just check. Reliance 2460C, and we will open its chart, because we will be doing it on the day of here 9th March. So let's see what was the 9th March premium. I hope you are not getting bored, because this video will obviously take some time, right? Because I'm trying to show you live. 9th March, 7th, 8th, 9th March. Here on the 9th March, here on the 9th March, the premium was 26 rupees, so 27 rupees. Okay, so what we did there is, we have sold it at 27 rupees. I don't know why it's showing 0.5 पैसा क्यों दिखा रहा है ये. Reliance March, it is running at 32 rupees. What did I do wrong? ₹27. So we will sell it at 27 rupees. Now the margin needed is around 7,08,000 rupees, something 7,10,000 rupees. So what we will do is, now what happens? Let's suppose my 250 lot size has given me around 149 rupees profit in my cash section, right? Now 149 into 250, you calculate it yourself. Second thing, if it expires here, if it stays here, if it moves around here, which is a very high probability of doing so, then what will happen? My premium will constantly decay, and this also will become zero. So I will gain money from this section as well, and I'll gain money from this section as well, and I will make both side profit. And to do that, I just needed around 30,000 rupees extra, because as you know, if I remove this, I need around 6 lakhs. Sorry, not 30,000, 1 lakh rupees. So I needed just 6 lakhs, and to sell a call, I needed just 1 lakh extra. So that is around 6.5% return on that 1 lakh itself. But obviously you need to choose a very good stock. Let's suppose choose Infi. We need a slow moving stock, to be honest, and we need to buy at a good support. We won't buy Infi because it isn't at the support. It has given the breakout. We need it at the support. Let's suppose Hindu Nilvar. Hindu Nilvar is also looking really bad. HDFC Bank and ICICI Bank. यार देखो, पैसे कमाना है तो फिर थोड़ा सा मेहनत तो करना पड़ेगा ना. मुझे परफेक्ट सपोर्ट चाहिए, राइट? तो मुझे परफेक्ट सपोर्ट चाहिए तो परफेक्शन चाहिए हर जगह पे. थोड़ा सा ढूंढना पड़ेगा. तो क्या हो गया, ये देखो, ये काफ़ी सही लग रहा है मुझे. ब्रेकआउट भी फेल कर दिया, साइडवेज हो गया. ऐसे साइडवेज चीज़ें ही तो चाहिए पैसे बनाने के लिए. आईटीसी भी चलेगा, लार्सन टू ब्रो, कोटक भी चलेगा. चलिए देखते हैं. आईटीसी, मुझे डबल सपोर्ट चाहिए, डबल रेजिस्टेंस चाहिए सबसे बेस्ट रिजल्ट पाने के लिए. यहाँ पे डबल रेजिस्टेंस था, प्राइस निकल गया. आईटीसी एलटी, ओके, बस वही सही था. रिलायंस ही सही था इस महीने के लिए. एज यू कैन सी, इट विल बी हार्डर फॉर यू टू फाइंड द परफेक्ट वन, but you need to find the perfect one. When you find the perfect one, your profit will be from the both side, from both the side. From here 150 points, that is around 37,000 rupees profit, I think 37,000 rupees. And if the premium expire worthless, then also you will get the good money. And now we will look for a worst case scenario. What will be the worst case scenario? Let's suppose the month started here and you didn't find anything. So what you will do is, there is a very easy way to make some money here, to get it at your own right price. What is that? Let me just explain it to you. That is called the wheel strategy. First thing, let's suppose the price opened here, right? And you want to buy it here. So first thing, when the month opens, sell a 2200 put. Sell a 2200 put. So we will be selling the 2200 put, but now we will open the chart. So the day was this 9/15, 2nd March. Let's check 2nd March premium. This was 2nd March, right? The premium was around 25 to 27 rupees. Let's suppose the premium was 22 rupees. It doesn't really matter. The premium was 22 rupees. So what you did, you have sold the 22 rupees premium. Now what can happen? If the price closes below this thing, 2200 rupees for the month, then you would have to buy the whole lot at that price. So that is a good thing because you wanted to buy it there, right? But what happened here, the price came to that but reversed. That is exactly why you have bought it, you have sold it, right? That is exactly why you have sold it, because there is a very high probability that it will move. If it doesn't move, it will come below and you will get it at a discount. So you want to buy a discount. So you will start with by selling a put. You sold a put here, and what happened? You have sold it at 27 rupees. Right now it's trading at 12 rupees. So overall you are generating 15 rupees in profit. How much it takes to sell? It takes around 85,000 to 1 lakh rupees to sell, but it is a cash secured put. So you need the full cash to sell it. You need to carry the full cash. So that is around, if you buy it 250 quantity, the margin requirement is 6 lakhs. So you are investing 6 lakhs and so far you have generated around 3.75 thousand rupees in return. So that is a decent return for now. Right now what happened? When the price started to reverse here, you book the profit here, you buy the lot, you sell the call. So you have already generated the profit here, 3.7 thousand rupees. Now you are generating around 150 points of return, that is around 37,000 rupees. So overall 40,000 rupees profit you have generated, and you have sold the call as well here, or at a high premium, that is trading around 5 to 6 rupees in loss. If this call expires worthless, then it will also give you around 6.5 thousand rupees. So overall in this whole month you will be able to generate around 50,000 rupees from all the sides, if it goes extremely well. If it doesn't go extremely well, let's suppose the price is moving above this thing, then your call selling will give you loss, but still you have bought the cash, so you will always be in profit. Let's suppose the price didn't stop there and it is now falling. You have bought it here and it is now falling continuously. In that case also you will be able to sell this call, and you will be able to collect the premium. Your loss will always be smaller, and you are planning to hold the stock, right? Because the stock is really good. That is exactly why your stock selection should be perfect. So let me just recap. First thing, when the month opens and the price is here or maybe here, you sell the put by using your own setup. Of course, you sell the put where the make or break level is. Either it will reverse from there or it will break there. You sell the put and collect premium. First thing, if the price closes below it, then you will be able to buy the whole lot. That is what you wanted, and you will be able to sell a call at the resistance to collect premium. Second thing, if the price started reversing, that is also good for you. You book the premium here completely. You book the premium here, and you also sell a call. So overall, you will be generating money because you have sold the put. You will be generating money because you have sold the call. You will be generating money in between. So the price if goes sideways or slightly bearish, your profit from everywhere. Most of the money you will make if you sell the put here. Most of the money you will make right here or maybe right here. That is the time when you book. So overall, why this is called wheel? Because it gives you profit in every kind, and you are buying, you are selling, you are buying, you are selling again and again and again and again. So that is basically the strategy. You first sell a put. Most of the time, to be honest, you won't get it. Sell an impossible put. If you are a safe trader, sell an impossible put. Maybe sell a 2,000 rupees. The price is trading at 2,400 rupees, right? So sell a 2,000 rupees put. Reliance 2000 put, sell it in the beginning of the month. The premium was 8 rupees, it is now 3 rupees. It will be expiring worthless. So that is around 2,000 rupees safely. If you do this 3 to 4 months, then you will be generating around 8,000 to 10,000 rupees in total, with on your capital of 6 lakh rupees. So that is a safe return for you. So that will be safety cushion for you. And if somehow the price trades below 2,000 rupees, you will be able to buy the whole lot at 2,000 rupees. That means around 20% cheaper. Think about that. 2,400 level and 2,000 level. Sorry, that is around 15%, 16% cheaper, I think. So that is also a good bargain for you. And when you buy the whole lot, start selling the call. If the price goes up, that is also your profit. If the price goes down, then that will recover your losses to a great extent, and you have bought the whole lot of a very good stock. If you don't understand this thing, then I'll be making a second part for you with more examples, more live examples and things like that. But I hope so far your view has been cleared. I have shown you the arbitrage, I have shown you the cash secured put and the covered call, also the wheel strategy. You can mix it all up. You can do one thing at a time, or you can mix it all up. How can you mix it all up? At the beginning, you short the put. to buy the lot, or if you choose not to do that, then buy the future at the support and sell the call at the resistance. That is called the covered call. That is also a very safe strategy. You can do whatever you want to, but every time you will be able to make money safely, a very good return safely. If your strike prices are really good and very far, which is very least likely to get activated, get ITM. So overall, this is the strategy. But I will suggest you one thing. If you have the cash of around 11 lakh, 12 lakhs, I will suggest you to go for arbitrage, because that is the best strategy that you can find with least amount of risk. That is called arbitrage, but you need the bigger capital in that. So I'll just close for now and have a great day.